looking out longer, I mean, these things are going to be $1 million a coin, then they're going to be 2 million a coin, then someday they'll be 10 million a coin. I mean, I'm with Sailor. It's going up forever, Laura. I mean, the interesting thing, I think a lot of people just don't, it's very hard to get your head around this, because most investors kind of think of, well, if it's an asset and it goes up and I make a lot of money, I should sell it because it's going to go back down. And that's, in many cases, that's true, especially if things get overvalued. But in this particular case, just as, with Warren Buffett or Amazon or, General Motors or Philip Morris or any great business that lasted a long time, it's not something you ever really want to sell, because it's a commodity, but it's a different kind of commodity. And historically, every commodity in the world, whether it be pork bellies or oil or gold or silver, or you name it, if it's a commodity and corn, the price of it goes up a lot, mankind will figure out how to produce more of it. Because the seller will make money doing so.
Lawrence Lepard warns that a significant reset to the financial system is imminent. The cost of servicing the U.S. government's debt is skyrocketing, and the debt load has gotten out of hand. Although interest rates have increased to combat inflation, they have also shown the system's true fragility. Bitcoin, silver, and gold aren't just doing well by chance. They're a symptom of a significant decline in trust in fiat money. Lawrence contends that the gradual erosion of trust in central banks is what we are seeing, and that once it starts, it will pick up speed. The result? Extended inflation, the depletion of middle-class wealth, and the emergence of alternative assets as safe havens. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
Is for our listeners to get an idea of how you're framing the current cycle and the market that we're in right now. So what's your base case right now for your investment portfolio?
I think there's several important things going on in the markets. They're sending us signals, and in particular, the big picture case is that we're in a sovereign debt crisis. And you can see this because since 2020, the price of gold has gone relentlessly up, the price of Bitcoin has gone relentlessly up, and the price of long-term bonds has gone relentlessly down. And so, this is different. We did not see this up until 2020. We were in a deflationary cycle. I think we've turned into an inflationary cycle. And as a result of that, my belief is that, it's going to take some time to cure that, and it's not going to solve itself. And in fact, because of some of the things that are going on, the way the government's behaving, it's going to get worse before it gets better. And I say worse for the long-term bondholders. I mean, the most recent thing that happened last week was the long Japanese government bond, the JGB, the 40-year, kind of went parabolic. It squirted out to an all-time new high. Now they came in and they intervened, they brought it back down. But the point is, it's a signal that more and more people are losing confidence in the ability of all these fiat currency issuers like Japan and the United States and others to maintain the value of their fiat currency. And the reason they can't maintain that value is that they will be forced mathematically into printing more money. And that's because of something called the debt doom loop, which is an entirely different discussion, but we can go into that if you like. So, to me, it's all coming to a head. We're seeing signs that they're trying to figure out ways to get liquidity without printing. There's something called the supplementary leverage ratio, which the banks have. It determines how much treasury debt the banks can hold. They're talking about eliminating it, which is more or less engaging the banks in QE, money printing. We're seeing the Fed recently. There's been some talk that inside the Fed, there's debate about whether to cut rates. We know that Trump has been pushing Powell very hard to cut rates, and Powell's been pushing back because he wants to maintain his reputation as being a sound money guy and looking like Paul Volcker. But my sense is that, things are going to come to a head. I don't know if it's next week or 6 months or 18 months, but they are going to come to a head because, the mathematics of the situation are they've got to continue to print money or else the existing debt structure collapses. So, when it's uncertain, but we kind of know what has to happen. And because you want to own things that the government can't print, because the government's in a situation where they're going to be forced to print a lot of money. The three most obvious things that fall into that bucket are Bitcoin, gold, and silver. Real estate, the government can't print real estate either. So it falls in there too, but it's I think it's suboptimal because I think it's a little overpriced. I also, it's got real estate taxes associated with it. So in financial asset world, gold, silver, and Bitcoin are the three, it's the troika of what I consider sound money that the government can't print. And now we've got a strategic, crypto reserve. So, so the government's going to ban it argument has kind of faded away. And, I think we're in the stage of where it's very important. It's going to go mainstream. And so in this cycle, I see, I fully expect that we're going to 140, 150, 200,000 a coin within the next 12 months. I mean, I strongly believe that. Maybe much higher. I don't know. I mean, I think whether it's a lot higher or not is partly driven by that earlier macro discussion of whether something breaks and the Fed is forced into a big print. And I'm highly confident that the big print will happen, but I'm less confident in my ability to time it to the month, in a couple of years. But within a couple of years, absolutely, it's got to happen mathematically. But, and when it happens, very much, I mean, if you remember the COVID stimulus, when that came along, that broke gold from 1365 up to 2000, and it broke Bitcoin from 5 or 10,000, it ripped up to 50 quickly. Because, both of these assets respond to money printing big time. So what we don't know is when the Fed will take the actions it will be forced to take. But when that happens, the prices are going much higher. And looking out longer, I mean, these things are going to be $1 million a coin, then they're going to be $2 million a coin, then someday they'll be $10 million a coin. I mean, I'm with Saylor. It's going up forever, Laura. I mean, the interesting thing, I think a lot of people just don't, it's very hard to get your head around this because most investors kind of think of, well, if it's an asset that goes up and I make a lot of money, I should sell it because it's going to go back down. And that's, in many cases, that's true, especially if things get overvalued. But in this particular case, just as, with Warren Buffett or Amazon or, General Motors or Philip Morris or any great business that lasted a long time, it's not something you ever really want to sell because it's a commodity, but it's a different kind of commodity. And historically, every commodity in the world, whether it be pork bellies or oil or gold or silver, or you name it, if it's a commodity and corn, the price of it goes up a lot, mankind will figure out how to produce more of it because the seller will make money doing so.
Market suppression like this cannot continue indefinitely. A flood of margin calls and forced liquidations may result when those bearish wagers begin to lose, particularly if investors are also heavily exposed to overpriced tech equities. Bitcoin might experience one of its famously explosive rallies as a result of that kind of chain reaction. According to Lawrence Lepard, short sellers find it to be a deeply religious experience similar to the enormous God candles of the past, when Bitcoin increased fivefold in a matter of months. For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
So, but here you have a commodity where it really doesn't matter what the price is. There won't be any more of it. There's 21 million units. So, that suggests that the price, so the only release valve is the price. So that suggests the price can just kind of keep going up forever as more and more people come to accept that it is the soundest form of money in the world. And it is, because the stock to flow is the lowest, and every 4 years it gets taken down even more. So, I'm extremely bullish about Bitcoin. And the beautiful thing about it is if you're not a financial person, if you just want to live your life, you've now actually got this really great savings technology that you can just kind of buy and forget about. And you'll wake up in 5 years and you'll be richer, and you wake up in 10 years, you'll be even richer still. You wake up in 15 years, your kids will be richer. So, it's just kind of, it's a beautiful thing. So that's kind of how I view Bitcoin. My theory on that is that we're starting to see paper Bitcoin get created. I mean, if, a friend of mine who's wise in these matters kind of showed me that it looks like about $30 billion of Bitcoin is moving around every day. Now, some of that may be just transfers, not sales, but most of it, I think, is purchase and sale. And it also looks to me that on Binance, there's roughly 15 billion of Bitcoin futures being traded every day. So, Bitcoin future is not a Bitcoin. You can't take delivery of the future. You're just betting with somebody on the price. So somebody can go to that futures market and say, I'll sell you some Bitcoin that I don't have. And you can buy Bitcoin that guy doesn't have. You're buying a futures contract on the future price, all of which will work unless that guy goes bankrupt. And, so my sense is, and this is partly why Bitcoin tends to have these God candles and move very aggressively. And sure, somebody today can sell Bitcoin thinking, paper Bitcoin thinking, well, it's going to go down. And I've been told that there's a very big short paper Bitcoin, long, the triple Qs and the Mag 7, because they've been so heavily correlated. And some managers have a mandate where they have to be long stocks. So they're thinking, okay, I'll be long these stocks, and I'll be short Bitcoin. Well, those people are going to get really badly burnt because those stocks are overvalued and Bitcoin is undervalued. So they're going to be on the wrong side of both of those trades. And when they have to cover that futures contract, when it starts running and running hard, they're going to have a deeply religious experience. Because as you and I both know, this thing could go from, it trades like a wild beast. We saw it go from 10 to 50. We've seen it go from 65 to 15, and then we saw it go from 15 back to 30, back to 58, back to, whatever. And so, I mean, we could wake up one day, find out somebody's short Bitcoin and they're blowing up, and that Bitcoin that they're short, they got to get covered, and whatever broker sold it to them, is in trouble. Maybe it's Binance, and Bitcoin's at $180,000. I mean, that could happen. I mean, it's not crazy. I mean, it went up 5x once. So 5x from here. I mean, at 110, I mean, it could go to $500,000. I'm not saying it's going to happen. I'm just saying that this is what we're talking about here. We're talking about something of limited supply, and if there's panic buying, I mean, I know I'm not going to be selling any. Most long-term holders aren't going to be selling any, and so we could see some very explosive price moves in this asset.
Lawrence Lepard cautions that paper Bitcoin, which is a type of cryptocurrency that is generated artificially through financial contracts like futures, is beginning to gain traction. He points out that approximately $15 billion of the $30 billion value of Bitcoin that is traded daily is linked to Bitcoin futures trading on Binance alone. The issue is that actual Bitcoin isn't used to back futures. They are only future price wagers, frequently placed by traders who do not really possess any Bitcoin. This implies that someone who does not have Bitcoin can sell it, and someone else can purchase it, both of them using promises rather than actual Bitcoin. He likens it to previous God candles, in which Bitcoin increased fivefold in a few months. He claims that given Bitcoin's volatility, it's very feasible that the price will unexpectedly soar to $180,000 or more one day. Lepard stresses that Bitcoin has a limited supply, and that the price can fluctuate quickly and violently when panic purchasing starts, even though he isn't making any precise predictions. He and other long-term investors aren't selling, and if demand spikes, there won't be enough supply. However, price activity isn't the only factor here. Lepard links it to the breakdown of our current monetary system, which is a far more significant problem. Keynesian economic policies and limitless money printing have encouraged governments, particularly in the United States, to spend excessively for years. The United States continues to run federal deficits at 6 to 7% of GDP in what is regarded as a robust economy. He cautions that things could grow considerably worse if the economy declines. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.